We'll be seeing other questions relating to costing. So we have finished methods and techniques of costing, which is the most important part of costing. So we have seen that about 60 marks comes from methods and techniques of costing. So the rest 40 marks is from other topics. So in other topics, which are the ones that we have to give more importance? We should study cost accounting standards. So I'm not covering cost accounting standards because they are standards which has to be studied end to end. Okay, so that one chapter you have to completely prepare for your exam. Other than that, we have preparation of cost sheet, reconciliation of cost profit with financial profits, and then we have specific calculations for material cost, for labor cost, overheads, how it has to be calculated, etc. So with respect to material and labor, the formulas, that is like Halsey-Rowan plan for different how the labor cost is being calculated under different methods. So that formulas you need to remember because they can come as a 2-mark MCQ. I don't expect a 7-mark question in that, but in 2-mark questions, you can expect calculations based on the formula. The first question is relating to preparing a cost sheet. Okay. So the first question I have selected is preparation of cost sheet. Preparation of cost sheet is very important because 100% there will be a question on preparation of cost sheet. Because as cost accountants, we should know how to prepare a cost sheet. What are the costs that is to be included in prime cost? What are the costs that should be included in works cost? And what will be the components of cost of production, cost of sales? Okay. So here we have been given a profit and loss account for the year ended 31/3/2024 and certain other adjustments are given. So first you have a question on preparation of cost sheet. Go through the entire question and identify how the expenses are being divided among office, sales and factory. So how is a cost sheet prepared? The format of cost sheet is it starts with raw material. Raw material, wages and any kind of direct expenses together will bring the prime cost. But to prime cost, we add factory overheads and adjust opening and closing stock of work in progress. We will get works cost. So WIP, the value of WIP is based on the works cost. Then we add admin overheads to works cost. We will get cost of production. To cost of production, you need to adjust opening stock of finished goods and closing stock of finished goods. Then you will get cost of goods sold. The difference between the sale value and cost of goods sold is the profit as per cost records. So this format is something we should memorize and we should remember. So now from P&L account, we need to prepare the cost sheet. So first we will start with raw material. So there is opening stock of raw material, closing stock of raw material and the purchases are given. So that will give us the consumption, raw material consumption. Opening stock, add purchases, less closing stock will give us the raw material consumption. So this is our raw material consumption. Then what are the direct material, direct wages, direct expenses? Carriage on material, carriage inwards. Carriage inward is a direct expense. It is part of prime cost. So we are adding carriage inwards 3,000 rupees. Cost of special design. cost of special design, and royalty. So royalty, we need to identify what type of royalty it is. If it is royalty relating to a brand, it will come under sales overhead. If it is royalty relating to production, it will come into your prime cost. So here in gross profit, it is while arriving the gross profit, they have factored in the royalty. Okay, so it is a direct expense. Gross profit, how you are arriving? Purchases, opening stock, direct expenses minus sales closing stock gives you your gross profit. Gross profit minus all the indirect expenses is your net profit. So this royalty is factored in the gross profit. Okay, manufacturing account, manufacturing and trading P&L account. Okay, so in the manufacturing account, it is factored in. So we need to include it in the prime cost. So royalty, cost of special design, we have included in prime cost. Then wages. Wages, direct wages, we have to include in prime cost. So we have included that also in prime cost. The total is 4,30,700. Okay, so we have our prime cost. Now next we are moving to other factory overheads. Power. Fuel is under direct expenses. Power, we can take it under factory overheads. So power 70,000 I am taking under factory overheads. Rent rates of office. So when you're preparing a cost sheet, what you can do is you can put a gap in between prime cost, works cost. So you can note down something like this. Prime cost, then give a gap, then arrive at works cost, then give a gap. Okay. Cost of production, cost of goods sold, okay, profit and sale. You can first, in your answer paper itself, you can first mention all these basic costs so that you don't miss out on anything. You don't miss out on a particular component in the cost sheet. So the base components, you can just put a gap and then mention the names. So we have prime cost plus factory overheads is going to give you your works cost. So the second step is to add on all the factory overheads. So first we have power, then we need to go to the adjustments, see how there is a division of the items. Telephone expenses 50% office, 50% sales, salary is 20, 60, 20. And establishment expenses 75-25 between office and sales, and electricity 65% to the factory and the remaining to the office. Okay, so now rates and taxes office. So here when you see the question itself, you know that rates and taxes are office is an admin overhead, so you can mention it here. Rates and taxes office 5,000. So this will help you to reduce the time that you spent in solving one sum. At the same time, it will also ensure that you are not missing out on any of the points. If you think that I'll finish the work cost and then I will come to the admin overheads, you will have to read the question every time to see what you have missed. And there is a possibility that you will miss the rent and rates for office because this is the first line item. Okay, you might think that rent and rates for factory have already included. You will put a tick and then go to the next one. So it's better that once you read, when you read the question the first time, that time itself you start noting it down so you will not miss out on any point. Rent and rate for factory. So rent and rate for factory, we are factoring it in the factory overheads. Interest on loan. Interest on loan will not come in the cost sheet. It's not part of a cost. It is outside your cost computation. Electricity 10,800. So electricity they have mentioned 65% is factory and 35% is to admin overheads. Okay. So electricity 10,500 into 65%. You can see here, this we are taking it to factory overheads. At the same time, you go down and then fill up the electricity expense under admin overheads also. 10,800 into 35%. Telephone expenses 2,500. So it is 50-50 between sales and admin. So telephone expenses 1,250, you have to record it under admin overheads. Then come down and record 1,250 under your sales overhead. So here. Telephone I have recorded. Then we go to the next one. Advertisement is totally a selling expenses, so entire amount you have to mention it under your sales overhead. Depreciation for plant and machinery is a part of factory overheads, so it will come under here before the works cost computation. Then we have depreciation of furniture of office will come under admin overheads. Depreciation of furniture of factory, again factory overheads. Depreciation for office appliances, again under admin overheads. Income tax is not taken under the computation, so we can avoid that. In the cost sheet, we need not factor in the income tax component. Okay, so we have the depreciation, you can see here. Similarly, you can see in the factory part also, depreciation factory. Okay, so with this, we have finished the debit side of the P&L account. And then they are given certain other information also. Salary 98,000. So salary 98,000 is divided between in the ratio 2:6:2. So 20% of this 98,000 should go into factory, 60% under admin overheads, and 20% under the sales. So you can see here 98,000 into 60%, I am taking it under admin overheads for calculating cost of production. Director's fee is a part of admin cost. So it will come under admin overheads. Then we have auditor's fee, which is also a part of admin cost. So it will come under admin overheads. Bank charges is a financing. Any kind of finance cost will not be part of our cost sheet. So bank charges is a finance cost. Interest expense is a finance cost. So they are not part of the cost sheet. Cash discount allowed, donations, these are all not part of our cost sheet, because cost sheet we try to find out what is the cost of production, what is the sale value, and what is the profit. We don't consider the discounts which are offered. We don't consider the financial aspects of the business. Okay. Rent of warehouse, again, this will be included. It is a part of your sales cost, because warehouse is where you store the goods in order to sell the goods. So it's a selling overheads. Rent of warehouse will be coming under sales overhead. 5,200. So with this, we are finishing the entire debit side. Now we'll go to the credit side and see what is to be taken. Sales we need to consider, that is 7,50,000. Now, raw material. Raw material, anyway, closing stock of raw material, we have factored in the prime cost computation itself. Finished goods. Yes. So finished goods, closing stock and opening stock needs to be adjusted. Where we will adjust after cost of production to find out cost of goods sold. Okay. So prime cost we have arrived. And once you factor in all these expenses in respective overhead heads, prime cost plus factory overheads. Okay, prime cost plus factory overhead will give us works cost. Works cost plus Admin overheads will give us cost of production. Cost of production adjusted for finished goods will give us the cost of goods sold. So after cost of production, we need to add opening stock of finished goods less closing stock of finished goods. We will get cost of goods sold. Cost of goods sold, we need to add all the selling overheads. We will get cost of sales. Okay. So cost of sales we have got. Sale value is 7,50,000. The difference will be our profit. Should we take discount received? Discount received is again financial aspects. So we need not consider. Sale of scrap at works cost, we need to consider. So it is mentioned sale of scrap at works cost. So where should we reduce this this amount, this receipt of receipt from the scrap sale? We need to adjust it at the works cost level because it is mentioned it is the scrap has been sold at works cost. So when we calculate the net works cost, we need to reduce the sale of scrap. This one minus 3,500, which is the amount of sale, minus 3,500. Okay, so it will be a big sum. Preparation of cost sheet will be a little lengthy sum. So like I said, prepare, just put the skeleton format of the cost sheet in your answer paper and then approach the question, and accordingly as you read the question factor in the cost at either prime cost or factory overheads, admin overheads, etc., and then come to the stock adjustments, adjust the stock. Then you see the credit side and see if there is any scrap sale or any other income other than sale which has to be adjusted in the cost. Adjust that and then at last arrive at your profit. So you will not miss out on any of the points, because if you miss the scrap sale of scrap, if you miss it, then your profit will be wrong, your end result will be wrong. So we should ensure that we don't miss any of the items that is there in the financial P&L, and all the required items should be taken care. Profit and loss statement of Kalyan Private Limited for the financial year ending 31st March 2025 is as follows. Okay, P&L account as per the financials is given. According to cost records, direct expenses have been estimated at 40 per kg, while admin expenses at 20 per kg. During the year, 6,000 kgs were produced, 5,000 kgs were sold. Prepare a costing P&L and then reconcile it. So there are two aspects here. You have to prepare costing P&L account and then do a reconciliation between the financial profit and the costing profit. So first step, preparation of costing P&L. Now this is a smaller sum. So it will be easier for us to prepare a costing P&L compared to the first question where it was very much detailed. There were so many expenses and we need to specifically identify which are factory overheads, which are admin overheads, and which are sales overheads. So here we have material, wages. So material plus wages will be your prime cost. Okay. Then there is closing stock of WIP, material and wages. Direct expenses is given 2,50,000. So first part, material plus wages plus direct expenses will give us the prime cost. Directly we can identify what is our prime cost. Now to prime cost, we need to add factory overheads and adjust WIP stock. We will get works cost. Is there any factory overheads? There are no factory overheads. There is only admin expenses available other than that. But there is a closing stock of WIP that we have to adjust. So closing stock of WIP, we will adjust with respect to material and wages. Material 40,000, wages 18,000. We will get works cost. So prime cost, add opening WIP. There is no opening WIP. So opening WIP is 0, less closing WIP. Closing WIP with respect to material, it is 40,000 and wages, it is 18,000. Adjust those two, we will get works cost. Okay. Now, why are we not adjusting direct expenses? Direct expenses, they have mentioned in the question that the direct expenses are estimated at 40 per kg. So as per costing records, what will be our direct expenses? 40 into 6,000. 6,000 kgs that is manufactured. 40 into 6,000. 2,40,000. We will not take direct expenses as per our financials. We will not take a direct expense of 2,50,000 minus 12,000. We will take directly as given in the question with respect to cost records. It is 40 into 6,000. So that is the direct expenses that we will consider in costing P&L. Okay, so prime cost minus your WIP with respect to raw material and wages. Direct expenses, we have a separate calculation, so we don't go with the adjustments in the financials. We'll get the works cost. Now next, we need to add admin overheads and adjust the admin overheads to get cost of production, and then adjust the closing stock of finished goods to get the cost of goods sold. Admin overheads is 20 per kg. Admin is 20 into 6,000 again. So 20 into 6,000, 1,20,000. We will not consider what is given in the financials. We will get cost of production. That is 10,62,000 plus 1,20,000, which is 11,82,000. So 11,82,000 is the cost of producing 6,000 kgs of this particular product. Okay. Now minus closing stock. Now closing stock, how to value closing stock? Closing stock will be valued at cost of production. Cost of production is 11,82,000 by 6,000, which is 197 per unit. So how many units of closing stock is there? 6,000 units produced, 5,000 units sold. So there is 1,000 units of finished goods lying as closing stock. So 1,000 into 197, that is 1,97,000 is the value of closing stock as per cost records. As per financials, it might be different. As per cost records, it is 1,97,000. Okay. So works cost, add admin overheads, cost of production, less your finished goods value, you will get cost of sale. Sale value is 11 lakh. So 9,85,000 minus 11 lakh. Profit as per costing P&L is 1,15,000. Profit as per costing P&L is 1,15,000 and profit as per financials is 1,10,000. So now we need to prepare a reconciliation statement. We will profit as per costing P&L. Profit is 1,15,000. So where and all the differences have come? The differences have come in direct expenses, admin overheads, and closing stock. So closing stock, with respect to closing stock. With respect to closing stock, we are reducing 1,97,000, whereas in financials, it is only 1,50,000. So what is the difference? 1,50,000 minus 1,95,000, 47,000 we are reducing extra in our costing P&L. Second one, with respect to admin overheads. Admin overheads is 80,000. We have reduced only 80,000 in the financials, but as per the cost records, it is 1,20,000. So what is the difference? 1,20,000 minus 80,000. 40,000 is direct expenses. With respect to direct expenses, what is the net direct expense? 2,50,000 minus 12,000. That is 2,38,000. What is the direct expense amount in our in the cost records? 2,40,000 is there. Whereas in the financials, it is only 2,38,000. That means there is an over absorption. The actual overheads is 2,38,000, but we have absorbed 2,40,000. That is, there is an over absorption of overheads. Same thing with respect to admin also. Admin is actual overheads is only actual expense is 80,000, but we have absorbed 1,20,000. So there is an over absorption of overheads. When there is an over absorption of overheads in cost sheet, what will happen? The cost profit will come down. So 2000 rupees is your direct expenses over absorption. So in this also there is an over absorption. This also there is an over absorption. So sum of this is 1,10,000, which is your profit as per P&L. Okay. So if you get a question like this, you need to prepare the cost sheet, find out what is the profit, and then reconcile the profit against the profit as per financial. And the reconciliation items will be the items where there is a difference in the approach. Like closing stock valuation, 100% that will come as a reconciliation item. Because closing stock as per cost sheet, it is valued as per the cost of production. So there will be a difference in the closing stock of finished goods. Other than that, wherever they are mentioning that as per cost records, we need to consider the overheads based on a certain rate, then there will be an under absorption or over absorption in those factors. A machine shop operates with 5 identical machines managed by 5 operators. Each machine requires a fully dedicated operator to function. The total initial cost of 5 machine is 10 lakh. So what is the cost of 5 machine? The cost of 5 machines is 10 lakh, and to operate 5 machines we need 5 operators. Okay, so only if the operator is available, the machine can operate. Otherwise, the machine will remain idle. Total available hours for the month is 208. Absence without pay 18. With pay 10. Normal idle hours 20. So what is the net time, that is effective time, that is available during a month? It will be 208 minus 18 hours of absence, 10 hours of leave with pay, 20 hours of normal idle time. We are left with 160 hours per month. So each person, each operator works 160 hours in a month. Okay. So if there are 5 operators, then they will work for 800 hours a month. And in a year, how many hours will they work? 800 into 12 months. So 5 operators in a year, they will work for 9,600 hours. So the total effective hours is 9,600 per year. Okay. The average rate of wages per day of 8 hours is 96. So 96 is the average rate for 8 hours. So what will be the per hour rate? We can directly find out 96 by 8, which is 12. So the average wage per person is 96 by 12, which is 12 rupees per hour is the average wages. Production bonus, that is 10% of wages. The following details are provided for a 6 months period. They have provided machine related details. What is the supervision cost, lighting, heating, insurance, depreciation, etc. Work out the comprehensive machine hour rate for the machine shop. So we need to find out what is the machine hour rate. So machine hour rate for the machine shop. The machine hour rate will be for the running of the machine, what is the rate plus the labor cost also. So per hour. Now we cannot directly take 96 by 12 to be the machine hour rate, because the effective labor hours, okay, effective labor hours is 9,600. Effective labor hours meaning the labor hours where they actually work. Okay, they are actually working is 9,600. But for how many hours are the laborers getting paid? Leave with pay hours 10. This is the main changing factor. They have leave with pay 10 hours in a month. So 5 people means 50 hours. In a year, 50 into 12. For that many hours, we are making payment, but there is no production. There is no, the machine is not operating during those hours. So we need to find out what is the wage rate based on the effective labor hours. So this 12 rupees is identified based on 11,400 hours. So how much is it for 9,600? It will be 12 into 11,400 by 9,600. That will give us 14.25. So 12 rupees per hour is for 11,400 hours. So if I have to adjust it for 9,600 hours, how will I adjust? So it will be 12 rupees into 11,400 by 9,600. That will give us the effective labor cost per hour per person. Okay. Now, there is a production bonus of 10% on wages. So what will be the bonus? 10% of 14.25. So the labor cost per hour is 15.675 for 9,600 hours, because we need to find out the machine hour rate. Machine hour is only 9,600. The labor hours, they are allowed even leave with pay. So the total labor hours for which we are paying is 11,400, but the effective machine hours is only 9,600. So we need to change this average rate of wages for 9,600 hours. So this is the main thing, main computation that will come, and we will miss out. We directly take 96 by 12. I have the average wages per hour. So we will take this in our computation, in the calculation of the machine hour rate for the machine shop. And the answer will be wrong. We will take 12 rupees and then 10% of 12 rupee, 1.2. So we'll take 12 plus 1.2 is the total labor cost, which is wrong. Now, next part. Value of power consumed. So value of power consumed, the following is for 6-month period. Again, another important point to note, it is for 6 months period. Whereas how we have calculated the hours, hour is for 1 year, 9,600 is for 1 year. So we need to convert all the 6 months expenses to 1 year. We should have a common base to calculate the machine hour rate per hour. So we have to convert all the 6 months expenses into 1 year. Value of material consumed, so it will be 28,500 into 2. Then supervision 18,000 into 2, which is 36,000. Heating and lighting 12,000 into 2, that is 24,000. This is per year. Then we have fixed expenses. The following expenses are for a year. So this is already given on a yearly basis, so we can take it directly. Insurance 24,000. Depreciation 5% of 10 lakhs. Sundry expenses 10,000. Repairs, we have 3% of machine value. So again, it is 3% of 10 lakh. Other expenses is 30,000. Okay, so then we add everything, we will get the total cost. And what is the hourly rate by 9,600? 9,600 is the effective hours the machine works. So 2,61,000 by 9,600, you will get the machine hour rate. So the total cost per hour is 42.86. That is, machine hour is 27.19. Labor cost per hour is 15.68. So the total rate per hour is 42.86. We'll resume now. Under a suggestion box scheme, employees whose proposals are approved would receive an equal amount of 10 months of savings in the cost. So there is a suggestion box in a factory where employees have given suggestions, and the suggestion that is approved will get 10 months of savings in the labor cost. As a reward, an employee recommendation to use a jig for a specific manufacturing operation was accepted, and the jig cost 1,000 rupees. It has a lifespan of 1 year. and it can reduce the standard time of the component by 6 minutes. The number of pieces produced in a year is 18,000. Standard time per piece is 1.5 hours before the use of jig. So after the use of jig, what happens? There is a reduction of 6 minutes. Then the raw material, average time, efficiency, overhead rate, and the direct expenses are given. We are required to calculate the amount of award, savings to the company, and the cost to the component. So first we need to start, what is the actual savings? Right? What is the savings because of using a jig? So standard time is 1.5 hours, that is 90 minutes. Now standard times after using the jig is 6 minutes, there is a reduction. So 90 minus 6, 84 minutes. Now, average efficiency of workmen is 75%. They are not going to work at 100% efficiency. And only if you work at 100% efficiency, you will be able to match the standard time. But they are not working at 100% efficiency. They are working at 75% efficiency. So what will be the actual time? Actual time will be 90 by 75%. So 120 minutes was the actual time before using the jig. After using the jig, what will be the standard actual time? It will be 84 minutes. 84 minutes is the standard time. 75% efficiency. So by 75%. So there is the revised actual time, that is after using the jig, the revised actual time is 112 minutes. So what is the savings, actual savings in time? We are saving 120 minus 112, that is 8 minutes. So the question tells you only the savings in standard time. We need to calculate what is the actual time saved, which is the difference between the actual time taken before using jig and after using jig. So whenever in your question the efficiency component is given, that means you are required to calculate the actual time also. Okay, even in this previous question, you can see there was this particular hourly breakup given on idle time and what is the time without wages. So that means you need to calculate what is the actual time. That is why the breakup is given. Or if the efficiency details are given, that is also an indication to calculate the actual time. So 8 minutes. So each production, each unit that we produce, we save 8 minutes. So 18,000 products we are producing, 18,000 units. 18,000 into 8 will be the total savings in minutes. By 60 will give us the total saving in hours. So 18,000 units, for each unit we are saving 8 minutes. So we have saved 1,44,000 minutes. By 60 will give us 2,400 hours. In a year we are saving 2,400 hours. Now what is the wage rate? It is 10 rupee per day for 8 hours. For 8 hours, it is 10 rupee. So 1 hour, it will be 10 by 8. 1.25 is the hourly rate. So 1.25, and how many hours we have saved? 2,400 hours we have saved. So total savings in labor cost is 3,000 rupees. Okay, so we have identified what is the savings in hours, and into the hourly rate will give us the total savings in rupees. 3,000 rupees we can save in a year if the jig is used in the place of proper labor being used. So what is the amount? First question, amount of award. What is the amount of award? 10 months of savings in labor cost. This 3,000 rupees is for 12 months, for 1 year. The award is given for 10 months of savings. So 3,000 rupees into 10 by 12 will give us the amount that will be paid as award. 3,000 rupees we are saving for 12 months. 10 months saving will be given as reward. So 3000 into 10 by 12. Okay. Now, next part. What is the total saving to the company? Now, total saving to the company is not going to be 3000. Right? This 3000 rupees is only with respect to the labor component. If you see overheads, overhead is 8 rupees per actual hour. So overheads also for 2,400 hours, we will be saving the overheads because 2,400 hours is reduced for 18,000 units. Now we need lesser number of hours only because we are saving 8 minutes in each production. So with respect to labor, we have calculated the saving in the labor cost is 3,000 rupees. Okay, 10% of the savings in labor cost will be given as a reward, 2,500. So savings in labor cost is 3,000. In that 2,500 will go as worker reward. So what will be the net amount, net saving for the company? It will be 3,000 minus 2,500. With respect to labor, they will save 500 rupees. Okay. Now, material, there is no change. Hours saved, it will have no impact. Then we have overheads. Overhead is 8 rupees per actual hour. So earlier, if the number of hours taken was X, now we are taking X minus 2,400 hours. So for the 2,400 hours, we will be saving 8 rupees. So 8 into 2,400, which is 19,200 is the savings with respect to overheads. Okay. Then cost of jig. Cost of jig is 1,000 rupees per year. So that is also an additional cost the company has to incur. If they have to implement this decision or this proposal, they have to incur two costs. One is paying the reward. Second one is the cost of jig. So cost of jig is 1,000 rupees. That also we are reducing. So labor cost, under labor cost savings is 3,000. Under overhead savings is 19,200. Additional cost incurred by the company reward 2,500. Cost of jig 1,000 rupees. So once we reduce that to cost, the total savings is 18,700. The last part of the question, what is the total cost of the component? Total cost easy to calculate. Number of pieces 18,000. Material is 10 kg at 50. So total material cost is 18,000 into 10 into 50. That is 90 lakhs. Then what is the labor cost? Labor is 8 hours for 8 hours at 10 per day. Okay. So how many hours we will require to manufacture 18,000 units? We know that the actual time taken is 112 minutes. Okay, so 18,000 into 112 minutes by 60 will give us the total number of hours that will be taken to manufacture 18,000 units. Okay, 112 is to produce 1 unit. So to produce 18,000 units, we will need around 2 lakh, 20 lakh minutes. So by 60 is 33,600 hours will be required. So 33,600 into 10 for 8 hours. So into 10 by 8. That will give us the labor cost. So 33,600 into 8. Then stores is 2% of direct material. So 2% of 90 lakhs will be our stores. Then we are paying the reward of 2,500, cost of jig of 1,000 rupees. So this is the total cost that will be incurred. So total cost comes to 94 lakhs, 94,300. Okay, so total cost computation is quite easy. Actually, the first part is the most important part. If you crack the first part of the question, the second and third part, it is just adding up the values. So first, the important thing is for you to identify that I have to calculate the actual time and the actual savings in time. And what is the total time saved in a year? Okay, so 8 minutes is saved for each product. So for 18,000 units, what will be the total savings? Once you identify that and you identify what is the savings in labor cost, then the other components of the other second and third part of the question, it is just based on the first part. Okay, so wherever efficiency of workmen is given, that means you have to calculate the actual time. Wherever the breakup is given as to what is the time with pay, without pay, etc., we need to calculate the effective hours, we need to calculate the normal hours. And it is based on that we will be taking out the labor costs. So these are some points that you have to remember while you read the question itself. You should be, if you see this PowerPoint, okay, it should click that, okay, I have to calculate the actual time. I have to calculate what is the effective hours, normal hours. So these pointers you have to remember, which are unique for each question. So next we will go to a question on overhead absorption. During the year, factory overhead cost of 3 production departments of an organization as under XYZ 50, 45 and 70. Department XYZ, the absorption rate is 6 rupees for 10,000 hours, 37% of labor cost of 1 lakh, and Z it is 5%. Calculate department wise over absorption and present the data. So first we need to find out what is the actual absorption of overheads. We have been given the actual overheads. Actual overhead is 50, 45 and 70. Okay, actual overheads are given. Now, what is the overheads absorbed? Overheads are absorbed based on fixed rates. So here it is 6 for 10,000 machine hours. So 10,000 into 6, 60,000. 37% of labor cost of 1 lakh. So 37,000 is the overhead absorbed. For Z, it is 15,000 into 5. So we now have the overhead absorbed values, then the actual overheads. The difference between these two will give us the under absorption or over absorption. So in first case, X, the overhead absorbed is 60,000, the actual overhead is 50,000. That means there is an over absorption of 10,000. In the second case, 37,000 overhead absorbed, but the actual overhead is 45,000. So there is an under absorption of overheads. In the third case, 75,000 is the overhead absorbed, the actual is 70,000. So there is an over absorption of 5,000 rupees. Okay, these are small questions which can come as a 2-mark MCQ question for you. Next, similarly, with respect to overheads, we have one more sum. A company allocates overheads based on predetermined rates. Okay, for the financial year ending March 31st, 2024, the overheads amounted to 3,50,000 absorbed. So the amount absorbed is 3,50,000, but the actual overheads is 4,500,000. So there is an under absorption of overheads by 50,500. So this we can directly calculate what is the difference between the overheads absorbed and the actual overheads is the under absorption. Now, additional details are available: finished goods, WIP, and cost of goods sold. You are required to calculate the supplementary rate and how the overheads will be absorbed as per the supplementary rate. So, when there is an under absorption or over absorption of overheads, we need to adjust it in the finished goods, WIP, and as well as the cost of goods sold. We cannot directly adjust it entirely in the cost of goods sold, because then there is a component of cost in the finished goods and WIP also. So it will be like we are putting too much of cost into the current goods that is being sold, and the finished good that becomes the opening stock of the next year will be at a lesser cost. So the profit calculation will not be correct. So when we have an under absorption of overheads, that has to be adjusted against each component, finished goods, WIP, as well as the cost of goods sold. So for which we use a supplementary rate. Now what is supplementary rate? Supplementary rate is under absorbed overheads by total of cost, that is cost of finished goods, WIP, and COGS. Okay, so it is 50,500 divided by 10 lakh 10,000. 50,500 by 10 lakh 10,000. That is the sum of 2 lakh, 1 lakh 40,000 and 6 lakh 70,000, which is 0.05. 0.05 is the supplementary rate. So if you are asked to calculate only the supplementary rate, you have to choose 0.05. If you are asked to calculate what will be the proportionate overheads that will be adjusted against each of the factor, then you have to calculate 50,500 into 2 lakh by 10,000, 1 lakh, 10 lakh 10,000. Then 5,500 into 1 lakh 40 by 10 lakh 10,000 and 50,500 into 6 lakh 70,000 by 10 lakh 10,000. So for each factor, you have to give the proportion and the overheads will be adjusted in proportion to the value of FG, WIP and cost of goods sold. So it depends on the question whether you need to stop with the supplementary rate or calculate the proportion as well. Okay. Now going to the next question. Sita, using the information provided, determine the monthly earnings of each of the workers, Geeta, Sita, Rita. So Geeta, Sita, Rita are 3 workers and we need to calculate what is their wages. Standard production 5,000 units. So I have factored in the standard production of 5,000 units. Actual production is given 3,000, 5,000 and 4,500. So whenever the actual production and standard production is given and you are asked to calculate the labor cost, there is a good probability you need to calculate the efficiency. So I have calculated the percentage of efficiency also, which is actual by standard. What is so there is 60% efficiency for Geeta, 80% efficiency Sita and 90% efficiency of operation for Rita, which is 4,500 by 5,000. Basic piece rate is 10 rupees. Okay, so piece rate, number of units manufactured into 10 rupees. Dearness allowance is 50% of basic. So we are taking 50% of the basic that we are calculating as DA. House rent is 36,000 per annum. Now this is for the month of December. So 36,000 by 12 will be the HRA component. Okay, 36,000 by 12, which is 3,000. Piece rate is actual production into 10 rupees piece rate. So piece rate is also this is a very simple question actually. So the DA is 50% of piece rate. 50% of 30,000, 50% of 40,000 and 50% of 45,000. Additional bonus of 15 rupees for each percentage of actual production exceeding 17%. Okay, so that is why I told that invariably when you are given actual and standard output and the question is relating to the labor cost computation, you will have to calculate the efficiency component. Okay, so above 70% of efficiency, for every percentage above 70%, 15 rupees is given. So first case only 60% efficiency, 0, bonus is 0. For Sita, 10% above 80% is the efficiency. So the difference is 10%. So 10 into 15, 150. For Rita, it will be 20 into 15, which is 300. This will be the bonus that will be paid. Once you add all the cost, we will get the total labor cost or the total labor payment to be made for Geeta, Sita and Rita. Okay. So these are the few questions that I had selected. So main thing with respect to cost sheet and with respect to questions relating to material and machine hour rate calculation, ensure to read the question once or twice before you start attempting. identify the pointers, like where you have to calculate the actual time, where you have to calculate the normal time, what is the effective hours. So these kind of important factors that you have to identify. So when you read the question itself, you have to understand how I have to approach the question. There is standard time given, there is efficiency given. So I need to calculate what is the actual time. Then I need to calculate what is the time saved. Time saved into the rate per hour will give me the total savings in cost. So what is the starting point of the answer? That is what you have to identify. That is why many of us, we will read the question, will say, I did not understand the question, I did not know how to approach the question, because you are not able to identify the starting point. From where should I start and identify the savings? So whenever it is with respect to savings, whenever it is with respect to machine hour rate computation, it starts with computing the hours. Okay, everything is based on the hours. Once you compute the hours, then based on the hours, you will compute the cost. And then total cost by total hour will give us the rate per hour. Okay. So that is it with respect to costing. And cost accounting standards, I'm not specifically covering because you need to study all these standards. And it is a short 7-mark question. So I will not require you to just select one or two standards or the important standards and study them, because we don't know which standard will be asked in the question. So it's better you study all the standards.